Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, as well as our co-host, SocialSuite, we're very pleased you joined us for our two-day Battery and Precious Metals Conference. We'll kick off today with a keynote presentation from SocialSuite, which is an ESG reporting platform. And please note you can submit questions in the box to the left of the slides, and you can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Athena Katsoulis. She's the account executive with SocialSuite. Welcome, Athena.
Hi, John, and thanks for the introduction, and thanks so much for the OTC for inviting us, and I'm very happy to be here today discussing all things ESG. So let's go ahead and jump right in. So for today's agenda, we're going to be reviewing what defines ESG and why it's important, ESG market drivers, some common misconceptions, as well as take a deep dive into SocialSuite, explaining who we are and how we specifically support small cap companies as they begin their ESG journey. Starting off with defining ESG. ESG reporting deals with disclosing non-financial risk metrics about your company's environmental, social, and corporate governance initiatives to impact mainly external stakeholders, including investors. From the environmental side, what is your business doing to be a steward of the planet? How is your company combating climate change? What's your business doing to reduce carbon emissions? And how your company is preserving biodiversity or even responsibly managing its waste. Social, what's your company doing to improve lives? How does your company treat its employees in the workplace? What are your diversity and inclusion initiatives? What is your organization's involvement with the community? Governance, what's your organization doing to stay ahead of corruption and ensure its investments remain sustainable in the future? Investors really want to see that your company is operating in an ethical and transparent manner, things like board and executive compensation, shareholder rights, etc. Jumping into the state of the market, you can see on this graph that ESG continues to be very important among investors. Here you can see this trend in ESG investments continues to grow exponentially in upcoming years. It is projected that over $100 trillion will be allocated to ESG funds within the next 10 to 20 years. Here's a quote as well, showing how retail investors deeply care about their ESG issues. In this article, it's demonstrating the majority of retail investors see ESG investing as a natural fit. With 57% of retail investors desiring to align their finances with their values and view investing as an opportunity to make a positive change in the world. Also, taking a look on continuing the theme of retail investors, here's a Wall Street Journal article sharing data about how the younger next generation of retail investors deeply care about ESG issues. Looking at the data, you'll notice almost 8 in 10 of millennials do want to make ESG-centric investments, as opposed to only 19% of baby boomers. This is a giant shift in generational perception. As more millennials come into this space, the uptick trend in ESG investing will only continue to rise. And why it's so important for micro and small caps to get started on ESG metrics, or you may miss out on the next generation of retail investors. So why is ESG reporting super important for small and micro cap companies? Well, first, access to capital. By building your ESG credentials, you can enhance your ability to attract long-term capital and favorable financing conditions. Moving over to compliance and risk management, globally, we do see ESG becoming increasingly regulated. By starting ESG reporting now, you're going to stay ahead of emerging ESG regulations. You're going to be able to downtrack, and it will help you mitigate compliant risk. And ESG can also project and enhance your company's license to operate. Reputation and branding. So, ESG reporting does show how your business is responsibly, managing your environmental, social, and economic impacts. And by reporting against this standard, comparable and recognized internal frameworks, you can enhance your company's reputation and perception to clients, stakeholders, employees, etc. And let's not also forget, it really helps these days with attracting and retaining clients and talent, especially, with our previous slide, looking at the data on, the new generation of millennials coming into play and really, caring about these initiatives a little bit more. We go ahead and break down a few of our main misconceptions. So first one, ESG is only sustainable for business or for sustainable businesses. Well, ESG is actually for all organizations, and we do work with a wide variety of industries within our customer base, all doing amazing work in many areas related to ESG. So basically, you don't need to be, a solar farm to do ESG reporting. It can be adopted in every industry and organization. ESG perfection. Well, it's not about perfection or a race to completion by, X day or X time. Institutional investors who have supported our members in recent capital raises confirmed this also. In fact, shareholders are more interested in organizations that have embraced ESG reporting than those that are perfect. It's important to show that you're on the journey as early as possible and what that looks like, for your organization specifically. So my investors don't care. Well, just as we were looking at the data previously, new investors do care, particularly if organizations want to attract institutional investors or fund managers who all have strict ESG criteria to allow portfolio inclusion. And ESG is expensive and difficult. So this is actually one misconception that previously we would agree with, but now with SocialSuite coming into play, we have been able to make it affordable and accessible for mid caps or small caps while demonstrating their ESG credentials from day one. Moving into ESG value and how SocialSuite comes into play with that process. So to give a little background on the company, we launched in 2016 out of Australia as an impact reporting software, mostly for nonprofits with the likes of Habitat for Humanity, the YMCA, and some others. So we built this expertise in building a software for the organizations to who were looking to make an impact on the world with limited, resources and budgets. So this led us to creating, SocialSuite, and with our deep network across the ASX and NASDAQ and the OTC, that many microcaps and small caps were struggling with ESG reporting. And we really leveraged our expertise in impact software to launch SocialSuite ESG in 2021. And again, just designed to help those small and microcap companies get started on that ESG journey. Through rapid growth today, we have 100 plus public companies across all 6 major exchanges. And we're using that to, track and report their ESG credentials. And when it comes to SocialSuite, we really take a 2-step approach. So we're going to help unlock this value by combining our expert coaching services and technology to easily share your ESG journey with your stakeholders. So in those first steps in engagement, our ESG coaches are going to run your company through a complete gap analysis, compare that to the WEF framework, the World Economic Framework, and really display exactly where your company is thriving or where they might need to, do a little bit more work in that ESG area. And then also completely create your whole profile on our ESG platform so that that data and information can easily roll over year after year, and so on and so forth. So how exactly do we do that? So we do understand that ESG is a journey. So we've spent a lot of effort to simplify that process for micro and small caps through our unique step-by-step materiality model. It makes ESG accessible, affordable, and scalable for smaller organizations, enabling them to start and evolve towards best-in-class ESG credentials. And just to briefly take a look at an example of a customer story here. So here's a case study from one of our customers, Battery Mineral Resources. It is an OTCQB company based in Canada. So they really knew that ESG reporting would enhance their credentials and put them in a better position, to raise funding and share the impact that they were having as a company. However, they didn't know where to start and what metrics to disclose. So SocialSuite guided BMR through this process with our support team and platform. This resulted in helping BMR build their ESG foundation and improve their stance with external stakeholders. And that is going to conclude today's presentation. And I do have a few poll questions that I would like to ask the audience today, starting off here with number 1. So what type of business are you? A company, a retail investor, institutional investor, or other? So again, what type of business are you? A company, retail investor, institutional investor, or other? Great. Getting those answers coming in here. All right. And next. So for investors, how much does ESG factor into your investment decisions on a scale of 1 to 5? 1 being not important, 5 being very important. Again, for investors, how much does ESG factor into your investment decisions on a scale of 1 to 5? 1 being not important, 5 being very important. All right. Perfect. And last, what trend do you think will drive ESG in 2023? Please select the most important. So again, what trend do you think will drive ESG in 2023? Please select the most important. Great. Okay, great. Well, thank you guys so much today for joining me. At this time, I would like to open it up for anyone to enter questions into the chat. I'm happy to answer those here. Okay, I have one coming in. So how prevalent is ESG reporting in the mining industry? We are seeing a giant uptick in that industry specifically. I mean, SocialSuite in itself works with mainly mining and resource companies, especially out of Australia. So that one is definitely huge. I also believe in Canada currently. They also have a new regulation coming out. Would need to get exact details on the name of that regulation, but I do know it is specifically for, explorers, resource companies, things of that nature. Okay, so what advantages does your platform provide versus self-management? Well, that's a really great question. So the main additional advantage SocialSuite is offering is, again, aligning you with that one-on-one dedicated ESG coach. So you're not going to be alone in this process. You're going to have that support. They're going to help you every step of the way. Again, breaking down those 5 steps of maturity through our program to really make sure you're not missing any pieces of the puzzle and that all of your disclosures are compared to the WEF frameworks and metrics to really boost that ESG score and, make sure we're not getting flagged on anything like greenwashing or anything of that nature. So definitely would say the one-on-one support with, the use of the platform is the benefit there because you're not just, doing it self-management style there. Okay. All right. I don't see any other questions coming in. I do know we have a few minutes, so if anybody does have additional questions, happy to take those. Okay. Well, then I think that would conclude today's presentation just a little bit early. Um, Again, this is my info on the screen here. I'm Athena Katsulis, an account executive at SocialSuite. There's my email if y'all want to reach out to me and learn more about the platform and the offering, as well as ESG metrics and reporting. And again, thank you, John and the OTC, for having me and SocialSuite today.